Hey, what's going on, everybody? It's your boy MC Fire coming at you again with another video. Hey guys, check it out. Today's date is the 27th of November, and we are going to definitely take a look at the market as it stands as right now. So, we do these videos, we're going to try to lock in some of these videos daily, but I will say that I'm really liking the just kind of the setups that we've been seeing. The variety yesterday was a lot, and so because of that, um, we kind of want to take a look at a lot of those setups again today, right? Really, really good stuff. So we'll start with the ones that we saw that we were checking out from the previous day. The really big names like AMGN. It had through a setup, but when by the time it opened, definitely already like blew past what we were expecting. Really, I mean, really blew past it, right? Um, Entry would have been here into the rally. Like we have adages over here, like when we're buying, we want to buy the dip, in short the rip. So we're already in negative territory. It did rip up here into 295, 295.8, and then break below the low. Definitely did that, but it did it in after hours trading. So we'll go over here to our flex grid, take a look at that. It worked a little too effectively. So breaking the low and immediately at open had already broke that and then really pushed, right? Massive fall through. So you definitely, the system works, man. Being able to identify where the edges and using all of the items at your disposal, you really do have a very clear and defined set of trading rules. Wasn't able to capitalize on that, which we could. It is what it is. We'll go look at Amazon though. Amazon appears to be really appears to be in a very set up zone. As you can see on the weekly chart here on the right hand side, we'll go full screen here. We'll maximize that. I've been looking at some longer term stuff. That's why like doing some back testing. That's why the chart was all the way out there. But essentially, been in a been what as we define as an uptrend with a golden cross, 21 period moving average trending upwards. That is 21 moving average simple. There's been some steady buying pressure. Remember, these lines that we draw, they are not things that the market has to stop and pivot. They are just invisible lines in space for us to help identify and kind of get a grasp on, is there typically a more of a trend in buying pressure, selling pressure, or like a resistance level? What is the market willing to accept, right? Statistically. So as we see, yeah, there's definitely buying pressure coming in, and if that maintains, traditionally we could see probably a hit of 3 ATR if that moves to the upside. So we would definitely be looking to take something like AutoZone to the upside. It's one we're definitely watching. We did see GM come in, not necessarily our cup of tea, what we're looking for. We'll go investigate that on the daily. But as you can see, there is a setup here, but it's not necessarily where we want it because you're at 3 ATR, right? You're reblaking 3 ATR, and typically I like to buy close or below our moving averages in a golden cross and sell away. This is kind of where I want to sell. So shout out to our mentors there. Same thing for SRE, and I believe same thing for STZ Constellation here. So there's it's there. It's a little better for STZ, but not quite to where we want to go to, right? And most of the time, we're gonna take either pretty straightforward positions, you know, maybe a vertical or even a butterfly. I do like the verticals because you do have a level of protection. There's no really need with leveraged instruments to just go like full out. You're already using a leveraged instrument and taking something that's within your wheelhouse gives you a measure of risk control, right? If you're buying one option, the larger option, and selling another option against it, a smaller one, it does give you some theta decay in your pocket, which is good, right? You get to curb some of that a little bit. So what we'll do moving forward, because we wanted to take some time to kind of look over some plays from yesterday and then kind of push forward here. So the first play that we saw that we want to track from yesterday was DHI. If you guys have some plays that you want us to take a peek at or give me a heads up on, we could definitely see if we can make that shake for sure. But DHI in a downtrend definitely have already ripped and was threatening to peekaboo lower, right? So really good that we have the mark there, the alert for it to break lower, because if this actually changes trend, this is kind of what we want to see. We want to be part of the very first one. Now, what I'm noticing though is that the unbalanced volume is still green, so I'm not too locked in on DHI to the downside. And I don't think DHI is too locked into the downside either, but we'll see. We'll watch it very closely, and we'll give you guys the updates as they come. CEG is next. So we've got CEG. Um, Something that we want to kind of touch base on. We did get into play, and it did stop us out, and then end up pushing to kind of close to our where our danger zone was, kind of the close of the gap there. Very high probability setup, kind of threw us for a loop, hunted us as liquidity. We got out, and then it ripped. So sometimes you win some, sometimes you lose some, but the reality is we got caught there, but it's okay because we took a very small stop out on CEG. We took our losses, and it was what it was. The fact that there was a gap here, so uptrend green horizontal line indicates the weekly uptrend on our daily chart there. Daily, right? Massive gap here, just literally just gapping through this rotational zone. So we were expecting that, hey, maybe it'll complete the rotation. Doesn't do it, but it does fill this gap. So a little bit more volatility than CEG, but I believe we just got hunted as liquidity, and it happens. It happens a lot of times. We're the ones doing that, but you get caught slipping. That's okay. So there's the update on that. Johnson and Johnson. There actually is a trigger for that to the downside, and if you notice, down here, we actually do have a working order for Johnson and Johnson. What I like about this is it isn't a downtrend, but the unbalanced volume is currently negative. So unlike what we saw with the DHI, if we go back, looking at our unbalanced volume, and it's more trending above the 64 moving average that we have there. Shout out to the mentors. It's trending above that. So because it's trending above that, I'm less prone, especially if kind of the overall trend is to the upside and the 21 period moving average is still trending up. That's why I would be a little bit more hesitant as opposed to what we got here in J&J. We've got a lot more factors working in our favor, right? Even though the 21 period moving average is up, the unbalanced volume is negative. The trend is also negative, and very, very violent rip to the downside, followed by a nice pop. These guys are a little exposed, and it's already going against them. So if you're a buyer, you didn't necessarily get paid here going from 150 to 154. That's kind of not what you're looking for. You probably are hunting a major reversal. So if it doesn't happen, you get a cut off size. There is more. You're more prone to look to hit the lows or pivot to at least the first danger area at 148 or even down to 145, which actually seems like it make more sense since it tested that level multiple times. Okay, so and longer term, as you can see, we're already in a kind of very defined channel down situation, right? With unbalanced volume being negative for an extended period of time. So that's kind of why I'm a little bit more leaning in J&J and wanted to pull the trigger there as opposed to the other ones. XLU. So shout out to XLU here. We'll give you guys an update on one of the positions that we are currently in, cracking through new highs. So we have the XLU, and we'll go take a peek at what's actually since we have a little time, what's under the hood in the XLU. When we go to look at certain stocks, tickers, whatever, and let's say a multiple stocks are making the same play, it might be because um, the ETF is actually in play. So let's go look at this as a result, as it regards to XLU. We'll go to our Flix grid. We can come back, but we really want to pull that up. So just to kind of get a heads up. So utilities, here we go. So companies, like you're noticing really quickly, right? This is XLU. This is what we are currently positioned in. But what are we seeing? Duke, uh, SO, you got SRE, AEP, right? A lot of these companies, Edison, a lot of them are either trending upwards in yellow territory or double green territory. So it's just something to think about. But there's not a single red on the momentum or the trend for any of these in the top 10 of XLU. So when you see stuff like that, that is a pretty healthy setup. It's a good way to just come in and it's like, okay, how is the ETF looking? Are we looking good? Are we not looking good? Like, what's the deal? So it's just one of those things that I like to look at. It's not necessarily incumbent on the trade itself to play out that way, just because all those factors are in play. I just like to look at those factors as uh, looking speak what's inside of this XLU ETF. Is it moving in the direction I want to see, or am I going to get some one-offs or some honey badgers there that are just doing their own thing? And who are those, and why are they? So with everything being green and yellow, we already took the roll, so we're already in profit, and it's already continuing to the upside. So targeting uh, statistically the 3 ATR territory is kind of what we want to do there. Yep. If I can get my zoom to work, boom. Yeah, we're targeting up here 3 ATR. Looking to get that full lock in there before we take our next decision, which for us means either we'll close a position, I'll sell a percentage, whatever, however you guys do it. Bad profit taking potential is kind of a loose rule, right? To let your winners run. To cut our losers short, it's pretty much a hard stop. We don't like to argue with that. So that's one of the very few times when I'm like, there is no ambiguity there. It's you got stopped out and you move on to the next play. PepsiCo. So getting into PepsiCo to the downside, we needed more downside positions anyway to get some short exposure, and PepsiCo has been kind of struggling. The unbalanced volume is trending green in the short term, but that could change with a move potentially with these guys breaking to the downside. Again, we do have a really tight stop here, so if it trends upwards, we'll go ahead and let it go. And after hours trading though, it's kind of going against us just a smidgy, but again, still below VWAP. So being below VWAP means like a volume weighted average price. It's as if your fair value as it is in real time, right? Where's the if the bulk of your orders were we could go into the details. Like I could break it down, but it would take too much time to kind of go into the system profile and show you like where we're getting that if it's plotted in time and space for your system profile and most of those orders, right? But really respecting VWAP yesterday on the downside end of it, kind of only breaking it through this sector, but other than that, really respecting it. So if it maintains that, this could fall through, and that's what we're looking for it to do. But we have a stop out in case it reverses on us. So buyers are there. It's just will they be able to hold out through? We'll see. Next play is Lowe's, LOW. This is one that we also are in and did see some results here. But we did get vol squeezed here. So there's something to think about if you know you have earnings coming up. A lot of people say don't trade during earnings because of the increased volatility. Well, part of that is it could go massively in the volatility department as it regards to a payout, but it also could be going against you as it regards to when it gets squeezed, and then the anticipation of high volatility, and then once that subsides, they price the options considerably lower in the Greeks. So just something to think about there. So those three plays we are currently in, XLU, PEP, and Lowe's. We'll be watching those and give you guys an update on that. But good news for Lowe's if it continues to trend a little higher. I'm not sure if it is doing that in after hours. We can take a peek real quick. But yeah, starting to push a little higher here in the 175 department. So hopefully we could see a position to make a decision here on lows and highs. It did suck a lot of premium out with that volatility crush. So this is something to note. Let's see what else we got as in regards to, and if you guys have been like what you're seeing, definitely give me a heads up. Hey, I really like this, or hey, we would like to take a look at this. If you don't like me, let me know. Let me know. It's fine. Just put in the comments, and we'll move forward from there. So maybe some plays to look at as potential growth plays. Apple here. We've been talking a little bit about Apple again, kind of the same overall trend that we're noticing. Again, this line is here just to kind of illustrate visually what we feel is going on. Doesn't mean that it has to respect our invisible red line in the market. Actually, it didn't. It broke that during this period in E5. We took that opportunity to take a buy, but let's see why we took it, right? We did see it was post earnings and had dropped pretty significantly to the point where I just had a buy biased that if it broke below levels and was trading back above certain levels, I was going to go ahead and take it, and we did. So we got into Apple there, and I want to just be in long term and track it. So there's also other opportunities to lock in Apple for a nice setup. We got a setup candle here, and could have took that for a very nice 3-day rip, and it could have held it into the middle of next week. So keynotes there. If you guys are confused on how I'm getting the green lines, I just go to add drawing here, and I just place a horizontal line there. It will show up consistently on all of my subsequent time frames. So on the left major pane is the weekly time frame, and then the right major pane is the daily time frame. After that trend change, right, you see a setup candle right here in open waters. I call it open waters because it's not on earnings or dividends or something like that. It's just out in the open. And those are like my favorite because it literally just, you're not going to get a volatility squeeze. It's not going to be a weird price in the option. It's just going to be raw price action, raw move. So if it's raw, then you could see some really, really good returns there for sure. Same thing here, really good returns if it moves in that direction. And this setup was flawless. So something to keep in mind. Let's go look at some of the core. There's the core could be changing trend. Now we did have we did profit some on the core. We profited on the short side of things. There was also another setup to profit from the rip here, and you could have took that to close that gap, which it would have been well within our reasonable plan to do that. We normally like to trade close the gaps anyway, and this juicy open water gap right happened. It was you see this setup candle here, and then like clockwork, it ended up closing the gap over the course of a week and a half. So yeah, that play would have worked out really good. Didn't take that one. We did take this one though. Kind of jumped the gun. Glad we did. But we also were cognizant to go ahead and make a decision as it approached this rotational zone. That's a first sign of danger. We make a decision as it ripped against us. Here, I noticed, hey, this is probably a good time to get out. So the buying and the selling triggers work kind of in tandem. They gives you an opportunity to catch this setup candle, but as you see, these guys are exposed at this resistance level. So if he breaks above there, let it go. It comes back down, but it never really does have any more follow through. So shout out to us for seeing that, using our edge to our advantage twice to make profits and to consolidate those profits to limit losses, and then avoid this. And then there's another setup there, but we didn't take it. So shout out to us for at least capitalizing on the first move. But it could be changing trend. Actually, we'll go ahead and mark that as green to mark the first change of trend. There also is unbalanced volume to the upside, so that's good. We have uh, we have good indications that this probably can follow through, and we'll be looking to buy the dip. It's that simple. We don't want to use our gut. Nothing really good comes out of our gut, especially not ideas. So we definitely want to use trading ideas based off of what the market's telling us, not imposing what we our hope strategy onto the market. Hope is not a strategy. We have if then statements and we have indicators, but we do not have hope. We do have NVTS coming out here, and there's a nice juicy rip there, and already trading the rip there, and then boom, right? So in a very clear defined downtrend. If you guys know, if you've been tracking, we are looking to be long-term buyers here, but we're not going to take another major buy in the actual stock until after a trend changes. But if you wanted to take a potentially short position here, this would be a very good time to do so. If you go look at what it's trading for, um, I don't think it's very liquid, right? I don't think it's one of the more liquid stocks. But if we're coming in here for the sell, typically we'll do a 50-20 delta. Um, and as you can see, you have a 64 delta at 65 cents. And then your 20, the closest thing to your 20 delta is here. And, the bid is said 0 0. So it's just something to know. Like, it's not very, very liquid. And, but it's going to be cheap if you do get it. Right. It'll probably be more filled in if as market opening goes. So we'll just keep that in mind. On the negative side of things, we have Microsoft and we have New. Now the way it works, why is it both on the negative and the positive? Because there is a kind of I wanted to stay there for like multiple days, so I don't want to just see something go and then it pops up that day and then it's gone, right? I at least want to know. We can evaluate the market based off of our indications of what we should do, because we have an edge and we want to kind of stick to that. But the reality is right, I at least want to see it. I don't want to just flash and be gone, right? There's no magic tricks over here. So let's go back to charts. Yep, charts. And then we'll take a look at Microsoft. Boom. Yeah, Microsoft is in kind of chop water, right? Could potentially be setting up to go to the upside, but right now it's just really rotational and hasn't made up its mind. Because it hasn't made up its mind, there's no really need. We prioritize over here uptrends, then downtrends, then chop trends. So this would be like the absolute last thing on the list for a potential setup. There was a potential setup here in the rotation, and then there was a slight follow through, and it's kind of back in the same zone, but not really looking to prioritize that. We are looking to identify, well, how do I feel, like what's the trend? I would say the trend is currently negative, but we're getting a lot of mixed signals. The cool thing about trading is, though, it's almost like a baseball game where you never have to swing. I think that was a reference from Warren Buffett. It's one of the few games that you can just watch pitches go by, and so you get that sweet spot pitch, and then you take your swing. So no real need here to really swing at anything just because it pops up on your radar, right? Um, that's pretty much it on that. We'll see if we've got any other plays in the slot. What that means to us is it's typically in a juicy position where remember when I said We like to buy close to the moving averages and still away from it. It's just kind of giving me a heads up that, hey, this is something close to its moving averages. So like here, CCI, it's not necessarily in the scanned watch list, but it is in a watch list, right? So we get to come and look over here and say, hey, we do have something that's in the slot, not necessarily a setup that we're looking to take. Maybe if it trades below this guy, but outside of the edge, so there's no real need to look at it, right? There is a setup candle to the downside already, but the reality is we're looking for our edge, and we could just let this one go. McDonald's. So the cool thing about McDonald's is it's kind of a similar story, right? We see some interest in it pushing up, and remember we did get this. I think we got stopped out on McDonald's. I'm not sure. It looks like we might have. We kind of took the massive setup candle there. The darker the color, the more potent the setup. But sometimes they don't work out. This gap, we were hoping that it would fill that gap. That's why the alert's there. But we did end up sticking to our rules, and rightfully so. It broke back to where we bought it and sold off some more. So we would definitely be way more negative than we are. That's why we have rules. So you win some, you lose some. So not looking at McDonald's for fall through, just kind of tracking it. MPC, I believe it's Marathon. Yeah, Marathon. Um, Again, a little bit of the same. Just watching the trend here. The There's not really a lot of correlation in some of these. So what I mean by that, it's negative, but the unbalanced volume is kind of going green. So we could potentially see a reverse. We want to be there for the trend change, and we'll just wait to see our perfect setup. We don't want to rush it. It's our hard-earned money. We want to do the right thing by it, and we want to definitely give you guys some solid content. So, like, was there maybe a position to play on this earlier? I would say, yeah, you could maybe take this, but you would have to respect all your buyers. The only one buyer is here. You probably got stopped out here before some follow through, so you get stopped out a couple of times. It would be one bar. We're 1 to 2 bar professionals over here, so you would have got stopped out on that one bar. Not too crazy there. It just gives you a nice risk to reward ratio there. Is there another setup? Absolutely. You take this one, and there's a really good follow through within the swing, like the over the week. It's almost like it completes the rotation. Bam, right, and then you can make a decision from there because this is your first danger area anyway. So you would be looking to take profits here after the the next 5 days. But the setup was very beautiful there, and then it just sold off. Boom. You rolled, took profits, whatever you wanted to do, and it completed the rotation back to the upside. Outside of that, your only setup was here, but again, where is it? You're not really close to the moving average. We want to be able to short these rips. So if it rips up against the trend, we want to see if we can catch that setup. Down here, it's already moved in that position. It might be trying to find price stability and not really have the catalyst that we're looking for to catch a massive rip. So I'm going to go ahead and mute the sound here because pretty soon we're going to get all these alerts as the market comes to open in about 40 seconds. But we also do have Coca-Cola here, and it is in dangerous territory. It is negative, just like Pepsi, but it does have a setup candle, so we put a alert there just to see where it's going, and it's currently in squeeze. That's something to note because it did take a little nice rip, but we would be looking to trade it quickly to the downside for a nice base hit. SEDG, another one, kind of not really on our radar there, but if you're looking to be a seller, well, here's your guy, right? We got setups all day. Boom, right? Boom, follow through. Setup here, all through here. You get some setups. Stop here, but this one, massive follow through on the gap move. So we got some GED, KO, ED, IRM. Nice. So got filled on Johnson. Johnson, shout out to us. Cool. Whole bunch of alerts. Oh, ADP. Market's moving. You love it. So we'll close these out. Just minimize these, and we'll kind of start on the day. So let's. What we like to do is we'll just take a look at SPY to start out and see how's it working, how's it pushing, how's it looking. Start out there, push over to the right. Uh, Bouncing against highs, so could be some follow through, might not be. Let's take a look at the cues. Uh, actually pushing to the downside. A little bit more relative weakness in the cues this year. The previous year there was a lot more relative strength in the cues, like a lot. So not looking too good for the cues as regards to relative strength, but not looking too bad for our position as it stands right now. We'll go take a look at some of those market watch triggers and see what we can come up with. Let's see. Boom. Start with the top one. We've got RTX. Let's go look at that. So look at that. Nice juicy play for RTX. We'll go ahead and see if we can take that setup. On the buy side of things, we'll get it for about 21 days, right? We'll go ahead and take a 50 delta on the call side. Pay a little bit more extra for because it's the one we really want. Hopefully it gets filled if it's not already pushing. See, does it have an opportunity to come down and pick us up? That's really what we're looking for. With it being up here, it could come down and pick us up. We'll leave it out there. We'll leave it out there. But we also got J&J. And so let's see. Make sure our setup for J&J is there. Let's see. It's still going, kicking strong. So we got in at open. We'll throw that on there for the open. And then we'll go ahead and put our alerts where we would necessarily our plan would be. So in J&J, we definitely want to respect all of our sellers, every single one of them that they are. And then first sign of danger is down here. So we'll be looking to make just a base hit decision to kind of eliminate risk on J&J with the hopes that it definitely gets down here. Now remember, hope is not a strategy, but these are the fundamentals there. Unbalanced volume is in our favor. It's going against, it's definitely going against the trend here with this rip. So we want to be a part of the downwards move on that. We'll see where our arrow is. I kind of got in that open. So we'll throw another arrow on there just for continuity's sake. But yeah. You're seeing me fat finger the controls here. Let's see if we got the right one. Nope, we didn't. So we'll get rid of both of them and just do it right like we should have did the first time, huh? Boom. All right. Kind of got in at open. So right here. Currently taking some heat on it for getting in at open, but it is what it is. Got in at least immediately to the downside. And we just stick to our plan. If it trades and it breaks, awesome. If it goes down and gives us profit, awesome. It's literally to us that simple. And we're gonna be around for that. The next thing to put on the market watch is we did get PEP trading below a certain level. So we'll go take a look at that. Boom. Kind of a little bit of bounce there. A little bit of bounce in PEP. So it's a really tight stop. If it goes up and it stops us out, we'll let it go. That's kind of what it boils down to. ADP. So we got that fill in the RTX. We'll pop over there real quick and then we'll hop back to ADP. Yeah, I just waited for it to come down and pick us up. So what we did is we got filled, but coming down and getting filled at VWAP was kind of the intention, and there it is. We didn't have to get filled all the way up here. We didn't have to chase it. It came down, picked us up. Makes sense because VWAP was all the way down there, so got a fair price. Little lag here. Bear with us, but there it is. So ADP, um, yeah, just being cognizant of it breaking highs there. Like I said, we kind of want to know when things are just going like, you know, ape, going absolute rocket ship. Just to be kind of aware. So ADP is definitely in that sweet spot, and well, bam, there you go. There was a lot of positions you could took to get this one, especially this one right here. The tighter the candle, the better the setup. So the tighter and more immediate the play, the better the setup. What do I mean by that? If this is tight, like a tight candle, not a lot of range in the candle, but it comes up as a setup in a good position, and then immediately gets washed, well, then that is a very high probability setup for us, right? You would respect all your buyers, even though it has follow through and pulls back. The follow through on the push is immense, right? So, um, and it just kind of continues, and that's kind of the point. Would you be okay with taking a buy at 271 and then possibly catching a blowout candle at 293 or even a blowout candle of 305? I think most people would be okay with those results, right? But that's kind of the point. The setup was there, very clean, very consistent. Um, let's go take a peek at RTX again. Take a peek at that. See if we start getting some follow through, because this is kind of the play that we want. Nice pullback, couple weeks into our sweet spot. Unbalanced volume is still kind of green, and this setup candle is there's a lot of chance for potential follow through, especially with the previous day's total engulf of that setup. So definitely something to look at there. We'll go through the rest of the triggers, but then we'll call it. We do have a trigger on Johnson and Johnson. Kind of just went over that, and ENT. So let's go take a peek at ENT here. Seeing all this live. Let's double check that. Make sure we have the right ticker. E10. We got a phone home. Huh? ETN. Yep, same thing as the other one, ADP. Just we want to know when things kind of crack the ceiling or when they don't. Kind of peekabooed above there, and so we just wanted to be cognizant of if it triggers F3 ATR, why, what's the news, is it earnings, like what's going on. So I still like to be abreast on all the setups because I get to put them in my mental log for what does stuff like this. And so if you make a play and its likelihood at 3 ATR, what's his past performance of just running through 3 ATR consistently, right? Going in massive rallies. So just keep that in mind. Was there an opportunity to catch this on the play? Yeah, absolutely, right here. You could have took this play right here, and then the rest is history. I think you'd be okay with taking a position at 336 and even blowout candling at highs here at 366. And it is in open waters. This is post earnings, so that's another thing. You're already past the shenanigans. That's really good. So there it is. 26 DHR. Oh, yeah, this is one that we're looking to. We'll let it go if it passes where we're uncomfortable. So we'll just be watching this like a hawk today. But that's all the time we have for today, guys. I appreciate your time and joining us. If you like what you've been seeing, let us know. If there's some things that we can make to add value to you guys, let us know. We definitely want to hear from you. If you like the setup, hit me up and we might be able to arrange something. But this is your boy MC Fire, and I appreciate your time and expertise. Keep trading, and I'll talk to you guys soon. Have a good day and goodbye.